Hey guys, I've got some breaking news. TikTok is being sold for $14 billion. And in the next 30 seconds, I'll explain exactly how they came up with this price tag, what the deal structure might look like, and how it might impact you. We live in times where there's a lot of changes, a lot of uncertainty, and these times of changes can actually make or break your financial future. This is why it's so important to stay informed, and this is why I recommend that you like this video, subscribe to my channel, and make sure you share this video with someone who needs to hear this. So let's get into it. Last year, lawmakers told ByteDance, the Chinese company that owns TikTok, that they need to divest from their US entity or else they would be banned from the US market altogether. Why was that? National security concerns. They were afraid that TikTok and the Chinese government would be able to access sensitive US citizens' data in their database, and they were afraid that the Chinese government would be able to tweak the algorithm to push certain narratives that would be beneficial to the Chinese government and be negatively impact basically the US government. Fast forward to a couple of weeks ago where a deal was struck to keep TikTok alive and well in America and under US controlled ownership. So this is what it looks like. So we had at the top we have TikTok US, the entity, and then they would say that ByteDance would actually keep just under 20% ownership of TikTok US. This was one of the requirements, and that 80% or more of the TikTok US would be owned by American companies. Oracle is the big one in here, but we also have Andreessen Horowitz, Silver Lake, MGX, and other that would probably move into this. One of my assumptions is that Oracle is going to get 40%. The rest of these investors altogether are going to be 40% ownership of TikTok US. Well, the initial plan was for TikTok US to store the data, the US data, in US soil at Oracle, and that has been done already. And then they would license the TikTok algorithm. It wasn't clear what that meant. It could mean that the algorithm would be licensed, but it would stay in China, still under the control of ByteDance overall and the Chinese government, basically. This TikTok algorithm, if you don't know what that is, this is really an AI-powered recommendation software that is the strength and the engine of TikTok. Without it, you'd just be pushing like random videos, and most of them you probably wouldn't like, and it wouldn't be able to really present the things that you're used to. So last week, the White House announced that TikTok US would actually lease a copy of the TikTok algorithm from ByteDance, and that copy would be installed in the US and would be under the control of TikTok US. So this is big, and that would satisfy the national security concerns that the lawmakers were afraid of. The thing is that when you do this, when you take a copy, you can't move the data with it. The data in AI structure or machine learning is all kind of like tangled up, and you can't unmesh it from the rest of it. So whatever the algorithm learned from the US users, it's going to have to relearn it. It's going to have to be retrained from the ground up, and this is what they're going to do. And Oracle is going to oversee this project. So this new deal again would solve the national security concerns. But what does it mean for the US users, for you and me, but especially the people that are using TikTok for business? US users will need to install a new TikTok US application. It's going to be a separate application. They're going to transfer obviously your videos and potentially followers and stuff like that, some data that's stored in the database, but it's going to know nothing about your video preferences, and from any of the users won't know any of these preferences. You're going to install this new US applications. During this transition, we're going to lose some users because a lot of people are going to say, well, I don't want to install the TikTok US application. I'm going to stay on, maybe we're going to be allowed to stay on the TikTok international application. Maybe they're going to go on another platform. Anyway, not everybody is going to install and register for the TikTok US application. The conversion rate will also be impacted because we don't know all the preferences, the video preferences, etc. are going to be very different. So what used to be pushed to certain users, if you had an ad or if you had some videos that were selling some of the products, or services that you were offering as a business, then it's not going to be, it's going to be broader now, so it's not going to be as targeted as it used to be. So that means that your conversion rate is going to be significantly lower. How low? I don't know, but I'm going to make some assumptions as we're going through this this article to kind of like come up with some ideas, some numbers here. But it's not going to be the same for your business. You can expect a drop in conversion rate, a drop in revenue, and that also means a drop in revenue for TikTok US as well. Let's look at the price tag here. So what is the value of TikTok US? So one of the quick way of doing this is to look at gross revenue and apply a revenue multiple to that gross revenue that is similar to other companies or other businesses in that same industry. So if we look at the gross revenue for TikTok US, it's currently about $10 billion. And the revenue multiple is between 4 and 6, let's say. So that means that the price tag for TikTok US should be around $40-60 billion. But as you saw in the headline, the price tag is $14 billion. So why is that? Why is such a dramatic drop in that value? A couple of things that you need to consider is that the government is going to ban TikTok US if they don't do this deal. So they don't have too much of a choice. They've tried to sell the business to other entities. Nobody wanted to take part of it. So this is kind of their last chance to preserve access to the US market. And this is a significant amount of revenue. So that's one thing. The next thing is that there's going to be some factors, as we talked about. There's going to be some attrition, followers that are not, or users that are not going to be installing the new TikTok US application. So we're going to lose some users. We're going to have some, due to the algorithm not being optimized, it's going to impact the conversion rate. It's going to impact the ads response, click-through rate, and all that kind of stuff. And so there's going to be an impact in revenue there as well. So I'm assuming a 20% impact on attrition, and I'm assuming 20% impact on the revenue in year one for the algorithm not being optimized. So now instead of a $10 billion gross revenue, we're looking at maybe $6 billion in gross revenue. If you apply again that 4 to 6 revenue multiple, now the price tag is between 24 and 36. Still a big difference with the $14 billion that we're talking about right now. Now, there are other considerations, right? So Oracle is currently making money hosting TikTok in the US. So they're making $2 billion in revenue. There's obviously a lot of costs associated with that. So I'm assuming they're making like $1 billion in profit. The other consideration too is that even though ByteDance owns only 20% of TikTok US, they're going to be getting 50% of the profit. So why is that? Well, because they're going to be responsible for the operations, for handling and managing the algorithm, for the e-commerce. This is something that Oracle doesn't know anything about. Like, this is not their expertise. They don't know anything about social media. They don't know about anything about B2C, and then they don't know how to manage that kind of business. So they're going to rely on ByteDance to basically manage all of that, to maximize the revenue as much as possible, so that all these things that we discuss, the conversion rate, the algorithm not being optimized, and also kind of like promoting and making sure that the attrition is as low as possible, we need ByteDance for that. Oracle can't do that. But to do this, they're going to get 50% of the profit. So this is a significant chunk of the profit that they're going to get to ensure, first of all, that they're in alignment, but also this is kind of like part of the pricing of this entity, and why you could drop the valuation a little bit lower, because they're getting such a big chunk of the profit. Now, the other thing is that US investors, they need to have an attractive return on investment, otherwise they're going to go somewhere else. So I'm going to run into some numbers here for Oracle, and then assuming that they're putting in $7 billion, right? So this $14 billion target, Oracle is going to put $7 billion, and the other investors, that's the Silver Lake and all that, they're going to put the other $7 billion. So I'm going to put two scenarios here in terms of revenue, the best scenarios and the lower scenario. So this is the $6 billion, assuming 20% attrition and then the 20% drop in revenue because of the conversion rate, low conversion rate. And then we have the infrastructure. So Oracle, I'm assuming Oracle is still going to bill invoice $2 billion to TikTok US. I'm also going to assume that ByteDance is also going to do the same. It's going to invoice TikTok US a certain amount of money. Maybe it's going to be the same amount. That's probably what I would kind of like think about, depending on their costs, but that's what I'm looking at. So they would look at $2 billion in profit, and then that would be split 50% to ByteDance, $1 billion here, and then $1 billion would go to the US investors. And the US investors, as you remember, is going to be Oracle and these investors, 50-50 here. So I'm assuming that Oracle is going to get $0.5 billion from that. On the best case scenario is that the revenues are exactly what they are today. There's no attrition, no loss in conversion rate, nothing like that. The profits are $6 billion, $3 billion go to ByteDance, and then the other $1.5 billion go to Oracle share, and the other $1.5 billion go to the rest of the investors. If I look at the ROI from Oracle's perspective, the low-end scenario is I make $1 billion in profit from the operations, from the infrastructure, and I make $0.5 billion from the profit here. I invest $7 billion and I get 21% return on that. I mean, it's not bad. Best case scenario, you put $1 billion and get $1.5 billion, you get 35% return on investment the first year. This is pretty good. This is getting decent. So we're talking about the price tag also. The price tag can vary, and at $14 billion, this is what it looks like. But if the price tag was any higher, let's say the price tag was double that, was $28 billion, which is kind of like that number that we came up here at $6 billion in revenue with a 4 to 6 revenue multiple. So 24 to 36, if at $28 billion, that means that Oracle and its investors would have to double the amount of money that they're putting in. Oracle would have to put $14 billion in a year, and that would basically cut in half that means that the return on investment would be between 10 and 17%. I can easily do 15% or more return on investment with the red brick equity. When we buy multifamily apartment buildings, we can easily do that. In fact, 15% is our low-end target, and it has a much lower risk, and I don't have to hire a whole bunch of people to manage all this. In my opinion, this is probably why they had to drop the price significantly to make the return attractive enough for the risk that Oracle is taking in this particular deal. How is that going to impact you? Well, if you are an Oracle investor, if you're already investing in Oracle, then you're going to have to consider this deal and how it's going to impact your stock price. Will Oracle actually issue additional shares, and that's going to dilute your investment in Oracle? What are the risks associated with that? What are that you associate with this? How is that going to look in the overall scheme of things when you look at Oracle's revenue and return? And then you decide what the price point is going to be for Oracle. Now, on the other side is that this new deal, even though it solves the national security concerns that we had, what does it mean for all of the US users? We already talked about the need for them, like all the users, to install a new TikTok US application, and you assume that some of the followers are going to be lost during this transition, and then that the algorithm won't know your video preferences, so it's not going to be the same experience, and we're not sure if it's going to ever be the same experience. But there's still a lot of things that are unclear. So will the users outside the US still be able to access your content on TikTok US? Because if I do if I do business on TikTok and I have a lot of my customers that are international, then I'm gonna have a problem. I'm gonna lose customers here, and it's gonna be very difficult. Will you be able to access foreign content? So, if you were relying on if you wanted to, as a user, watch foreign content, are you going to be able to do this? Will you be able to keep the international version of TikTok on your phone so that you can watch international content? Or will the US users actually be forced to only use the TikTok US app, and then the other TikTok app is not going to work on your phone at all? So what do you think? How do you think that this TikTok change is going to affect your business? and your personal life. Make sure you drop your thoughts in the comments below. We live in very uncertain times right now, and with so many changes happening every day, you know that these changes can affect your investments and your financial future. That's why it's so important to stay informed, subscribe to this channel, click the like button, and share this video with someone that needs to hear this. Personally, I always keep myself protected by diversifying my money into different asset classes, not just the stock market. I learned my lessons during the dot-com crash. I had millions of dollars that were diversified into the stock market. I had very little that was in real estate. And when the dot-com crash happened, I lost millions of dollars in the stock market. Luckily, I still had a little piece of real estate, and from that, I was able to rebuild my wealth. And that's why today, I keep the majority of my money into real estate. Real estate is a tried and true investment, and real estate has tons of advantages that the stock market just doesn't have. You have appreciation, you have cash flow, you have leverage that you can use over a long period of time, and you have tax advantages that are just not there for the stock market. So I've been investing in real estate across the US and Canada for the last 35 years, and honestly, it has always worked in good times and in bad times. So if you want to protect yourself and start investing in real estate alongside me, don't know how to get started, click the link below for my investor game plan. I'll also be posting updates on this story and other stories that might affect your financial future. So stay tuned and see you next time.